What will the GoldPesa price be in 10 years? The question I get 5 times a day. So as a team, we wanted to openly share with everyone how we answer this question. And this question is based on, of course, a lot of assumptions, which we can openly share so you can get a good idea of how the entire 6 or 7 smart contracts in the GoldPesa ecosystem all speak to each other, how the money flows, how everything works, so that you can see how we've designed the tokenomics and the GoldPesa ecosystem to generate the best value proposition out there for everybody and to create a really, really strong cryptocurrency. So continuing on from where we were last time, we'll just continue with the process. So we were looking, if we look at the smart contracts that make up GoldPesa, we have a fund wallet. The fund wallet smart contract is there to accumulate the fees on behalf of GoldPesa inside the smart contract. It is also there to give us an input into the other smart contracts, so we have a good idea of how much distribution we have in a decentralized way. The GoldPesa mines a gamified staking, which is one of the most crucial aspects of the GoldPesa ecosystem. It provides a way for our users to stake $10 worth of GPX tokens and earn a piece of GoldPesa for life, as we hard code a 0.25% fee anytime GoldPesa is bought, sold, or transferred. That goes to the GoldPesa mine. We then have the GoldPesa option, and the GoldPesa option was designed to be a very simple ERC20 token with 100% of its liquidity locked inside of Uniswap forever, fair launched with no team tokens, no freebies, fully decentralized, immutable, ownerless, trustless smart contract. This was designed to allow big buyers to enter the ecosystem, and the first time in I think in history where large buyers will be able to buy $5 million, $10 million worth of GoldPesa option and have minimal slippage. And the reason for that is because of concentrated liquidity, which is a new piece of code which Uniswap V4 does very, very well. It started with Uniswap V3, but with Uniswap V4, you're able to offer concentrated liquidity as well as hooks, which allow you to govern your liquidity pool in a lot more efficient way. We have the GoldPesa Vault smart contract, which is designed to stake your GoldPesa options or GPOs and convert them to GPX. The GoldPesa token itself, which is GPX, designed with a 1% fee on transfer as well as 1% fee on swap, where 25% of it goes to the pawn, 25% of it goes to the mines, and 50% of it goes to the wallet, which is 0.25, 0.25, and 0.5. I'll make this a little bit larger so everyone can see. The pawn smart contract, a critical point of the entire ecosystem, designed to accumulate 0.25% in fees every time GPX is bought, sold, or transferred. Designed to swap USDC for GPX, GPX for GPO, and GPO for USDC as an hourly mechanism, which allows option holders to convert from GPO to GPX in a systematic way without the risk of large token holders dumping on the ecosystem. It's there to accumulate profits from the pawn AI, which generates a real profit from external of the GoldPesa ecosystem, and it distributes it to the GoldPesa holders using the pawn smart contract and the 3-step buy and redistribute process. And this is what makes GoldPesa so unique, extremely well thought out, and we are on the final sort of stages here. So we'll just continue on with our process. Start opening up our simulations. So we were, let's see if we can just increase this. All right. So as I think through this process, I'm sharing this live with everyone so you can get a good idea of what is going on in our heads when we're coding these things and what assumptions we're making to be able to answer the question of where the price will be in 10 years or even 1 year, 2 years. You can get a good idea. from this. So from the smart contracts that I just discussed, the fund wallet, very simple smart contract. It's just built to collect the fees from GPO and GPX. We can see that the very first thing we're doing is creating a GPX fund wallet, and we're creating a GPO fund wallet. So we're going to just debug this together. Let's get out of here. So what we'll do is we'll debug this all together so that we can really go through this carefully and make sure that everything is correct. So let's just start this, and we will go slowly and look at exactly what's happening. Because when I start debugging this, this is exactly what's going to happen on the blockchain. Step by step, everything you see in the simulation is going to be happening live on the blockchain under a stealth launch, which I'll get into a little bit later. So as we're doing a debugging of the code, every time I put a breakpoint, we stop there and we can analyze and go into the code and make sure that all the funds and everything is moving in the right direction, so that when we hit the simulation button, we know all of it's working smoothly. So let's start that process. That. All right. First thing, we are going to create a fund wallet. So we're going to create an instance of fund wallet. Why we are doing this? So we are doing this so that we can create a instance of the smart contract called fund wallet for anytime GPX is bought, sold, or transferred. There's a 0.5% fee. That 0.5% fee is going to be collected by the fund wallet, which is this wallet here. And so we are going to go in here, and we're going to step forward through this. We can see that a fund wallet has been created here. That's called GPX fund wallet, as we named that. And we're going to step forward. We know there's a GPO fund wallet created, GPO fund wallet with the name GPO fund wallet, capital F, capital W. So now we're going to create a USDC instance, which is simulated to give us the characteristics of USDC. USDC coin, we're creating a large amount of tokens just for our simulation so we can get a good idea. Otherwise, it mints the entire supply and stores it within this smart contract. And so when we do that, we should see an instance of a USDC, and that is right here. We can see that it's got a fixed supply of 100 billion, total supply of 100 billion. And we can see the balance of the 100 billion is sitting inside of the USD smart contract, which has an address of 0x USDC. Of course, on the blockchain, it's a proper hexadecimal 20-digit number. But in this case, we are just using USDC to make it easier to simulate. Now we will keep going, make sure this is right. So next, we're going to create an instance of pool manager. Pool manager, we can see in the constructor, we're just creating a dictionary of mappings which give us the pool ID to the pool object, which is here. So we're going to have two different pools, a GPX USDC pool as well as a GPO USDC pool. So the pool manager is there to create the pool and add liquidity when we need to do so. For now, we're just going to create an instance of that. So we can see that we've created a pool manager that has a 0x pool manager address, and the dictionary has got no pools in it, so that's fine. Now we are going to pass the pool manager into the mines, and we're going to create a GoldPesa mines instance. For now, of course, the GoldPesa mines logic is much more complex. It's gamified staking, but for now, the main function that we want to simulate is that miners can come and buy a GoldPesa miner, which is $10. It's usually $10 plus a 10% fee. But in this case, because a 10% fee is swapped and deposited into Chainlink to be able to pay for VRF, which is a source of randomness that is off-chain, which is very important because getting a source of randomness on a deterministic blockchain is not easy to find and easy to hack if you're able to determine exactly what the random number is going to be. So you can really position yourself in such a way to exploit that. So we found off-chain random number generator, VRF, using Chainlink, and in order to pay those costs in a decentralized way, we are taking a 10% fee, but we are not accounting for it in the simulations because it doesn't really go into our ecosystem. So we're going to create this GoldPesa Mines smart contract with total miners starting at 0x mines as the contract address. And we have one function, which is buy. It allows us to enter the number of miners we want to buy at the same time. Gives us the total cost by multiplying by 10. It takes the $10 and swaps it with the GPX USDC pool. This is false, which means it goes from token 0 to token 1, and token 0 in this case is, we can just write it here, equals GPX. Token 1 is, and this is the case in all Uniswap V4 liquidity pools. Usually token 0 is the contract that has the address that has the lower decimal value, and token 1 has the contract address that has a higher decimal value. So in this case, GPX USDC, these are the token address. So false means swapping token 1 to token 0, which is true as we're buying in USDC for the sake of this simulation. And we are then increasing the total number of miners by the amount of miners that are purchased. So that looks all clean. Save that, create that instance, and we should have a mines instance here with 0x mines. Total miners are 0, and we have passed in the pool manager. So then the next step, we're going to go through and make sure that our GPX hooks contract, and the GPX hook contract is a very unique feature of Uniswap V4. It allows a swap to call a hook within our hook contract, so we can add custom logic to before and after liquidity is added, before and after liquidity is increased or decreased, before we rebalance the liquidity, before and after a swap. This is what the hook contract does, and it is what is truly unique about the entire GoldPesa ecosystem. It is built using Uniswap V4 hooks in a 100% decentralized manner with no owner, immutable, unupgradable smart contracts. So we go into the GPX hooks. We won't go into details here because we've done that. Effectively, we are starting with a GPX total supply of 100 million. We will deploy 100,000 tokens first into the GPX USDC pool, and then we use a demand-based release of supply. And inside of our hook contract, we are creating the instance of our GoldPesa token itself. We are then creating the pool and adding liquidity. We add liquidity using the initial supply, and we add liquidity in a range from tick 0 to tick max, which is effectively a price of infinity, and tick 0 is a price of $1. So GPO and GPX are both launching with a starting price of $1, and that will be the initial liquidity that we start our liquidity pools as a fair launch. So in this situation, we are simply passing in the following 5 contracts, starting with initial market cap of 0, and we'll go ahead and create that instance. Of course, GPX is already created as well, which is inside of the hook contract. So you'll see here GPX is created with the 0x GPX, fee on transfer is 1, fixed supply of 100 million. We've passed in the vault address, a total supply balance of, we got 100,000 tokens inside of the pool, and we have 99,900,000 that are sitting inside of the hook contract. And because the hook contract is ownerless, the market can feel comfortable that GoldPesa does not have access to this 99,900,000 tokens, and that is the same live on the blockchain. And this 99,900,000 tokens is slowly trickled into the market on a demand-based release of supply, which is custom to our ecosystem. That takes us to, I think everything looks good there. We just pull an instance of GPX so we can access that. Now we create a GPO hook contract. GPO hook contract is much more simple. We create a GPO within the hook contract so we can pass the hook contract into the GPO token. The GPO token is fairly simple. And the only reason we pass the hook contract at the sake of simulation is that all 100 million tokens are minted and delivered to the hook contract on T0, which is the first time we deploy. And then inside of the GPX hooks contracts, we then use that 100 million where we take this total supply starting at tick 0 to tick max, which is $1 to infinity. And we create a pool and add all the liquidity. You will see there's no way possible to rebalance this liquidity in here. And that liquidity stays the same forever, which is a 100% fair launch. For us to be able to have done this exact thing in Uniswap V2 or even 4 weeks ago, we would have needed $100 million. So this is a really important reason why we waited for Uniswap V4, because we needed $100 million to do what we can now with a fraction of that. So there's only two main functions that are called in the hook, which is before swap. And the objective is to take the 10% fee, which is here, and swap that 10% fee USDC and transfer it to the GPO fund wallet, which is GoldPesa's fund wallet. And that 10% comes to GoldPesa anytime a GPO is bought or sold, but not transferred. So that's why it's only inside of the hook contract and not inside of the token itself. And this 5% of the 10% is allocated to GPO Polygon liquidity pool. So holders of GPO Polygon who are lucky enough to own a GPO Polygon token, we've sold 15 million of them. Those token holders effectively have locked in 5% of GPO's volume from GoldPesa for life. So that's what you get for being early. Backing GoldPesa at a very early time, you receive 5%, and that 5% will be transferred into the GPO Polygon liquidity pool regularly, which will increase the value for GPO Polygon holders. That 5% will also be used for GPO holders to be able to swap into GPO base. But ultimately, that half of the 10% is there to provide earnings and profit for the original GPO Polygon holders. So of course you'll be able to buy GPO Polygon, but only if somebody else is willing to sell that. There's no new supply that is going to be deployed into the market at this time. So this is a very, very unique position to be in if you are a GPO Polygon holder. So if you can pry it out of a GPO Polygon holder's hands, then I would suggest that might be a good idea if you can do that. So that's the GPO hook contract. It just takes a 10% fee. So that's good. So we step through that. We create that hook contract. So we just want to make sure everything is okay. GPO hooks, fee on swap 10. Okay. Keep going here. And we create the vault. So GPO, we just grab the instance of GPO. Now the vault is the GoldPesa vault. And where is the vault? Oh, there. So the vault has a very simple job, which is to stake your GPO tokens, and the pawn smart contract calls the convert GPO to GPX function and swaps GPX for GPO, as we will see in a minute, and effectively allows GPO holders to start converting their GPO into GPX. And the reason we did this is that it allows for large buyers to enter the ecosystem using the GoldPesa option. And then it allows them to convert into GPX when it is available using the pawn smart contract, which allows it to slowly trickle into the GPX market. And it allows dollars to also enter the GPX market in a systematic way. This creates a very, very unique, very, very unique feature of the GoldPesa ecosystem, because there's a constant drip feed of dollars going into the liquidity, which is very, very important when you're launching this new form of value into the market. So that's what this does, transfers it GPX and then transfers GPO back out. So that's the vault. Okay, I think that looks pretty good. We create the vault. Okay, that's that. We'll just check that's okay. instance of GPO, GPX, and all right. And now the pawn smart contract, which is so important. Now the pawn smart contract, we want to first create it. We definitely want to put in some hooks here so we can go through this mechanism very carefully. We will create the pawn smart contract. Okay. And this mode here, this is a manual mode which we'll play around in a minute. Basically, this says that 50% of the time every hour, 50% of the time is a net buy order and 50% of the time is a net sell order. And this gives us, we can adjust this to give us a bit of an idea of how the simulations go. So if we're getting half buyers, half sellers at random, where will the price be? If we're getting 40% sellers, 60% buyers every hour, where will the price be? And so on average, we can get a good idea where the price would go based on the different settings and demand that's in the market for GoldPesa. So we create the pawn instance, and that went successfully. So we have two different pools now created here. We can see that. Actually, two different pools are referenced there. Inside of the pool manager, we should see two different pools. So yeah, created. Inside of those, you have GPO USDC. You have the total liquidity on GPO, which is 100 million. That's lower tick is 0. Current price is 0, which is $1. This is equivalent to $1. And then upward tick is basically tick max, which is a very big number. And we can see the fee is 10%. So GPO liquidity looks set to go. GPX liquidity, we put 100,000 tokens initially from $1 to infinity, or a large number, to 1%. And the current price or the current tick is 0, which means we're starting at $1, which we're starting at the bottom of the range. And that looks perfect. So we got two pools created, liquidity is ready to go. So now we want to start setting up some of our wallets so that we can simulate this. So the first one is the Pawn AI. So if we go back to our chart here, we can see that this is our entire ecosystem, right? So this Pawn AI algorithm, which is what makes GoldPesa truly unique, it generates a profit, and this profit is then transferred into the Pawn Smart contract. Generally, we want to do this as frequently as we can, but this is a manual process. And in the further video, we'll show exactly how the pawn is doing this. And we have a number of videos to do that. And by using this proprietary intelligent algorithm, which is extremely unique and took GoldPesa team 20 years to make, so difficult. I can't even begin to explain the number of hours that have gone into the research for this algorithm, to be able to generate a constant profit, not only from an intelligent standpoint, but also in a business model that is sustainable without using the funds from the GoldPesa ecosystem. This is very important. We do not take out any money from token holders. All the money that our GoldPesa option and GoldPesa token holders use to buy the token goes inside of the Uniswap liquidity pool, and it stays locked in there forever. Which means I don't have control on that. Nobody has control on that. If you want to come and sell in 10 years, your money will be sitting inside of Uniswap. So this is what a fair launch means. It means that there's no money that is going outside of the ecosystem that has entered using a buy order that is placed by the market. No free tokens, no team tokens. I don't own any. If I want to buy some, I also have to buy them as well. No freebies, no referral commissions. This is a truly sound form of money. The moment you start issuing out any free tokens or anything like this, it creates illiquidity because there's extra supply in the market and not enough dollars inside of the ecosystem. This is why we launched the GoldPesa option on Polygon first. We launched it on Polygon in order to be able to reach and provide an option to the market to enter the ecosystem. And GoldPesa option Polygon holders got an amazing price in exchange for illiquidity risk. But that allowed us to get to where we are today. And now we're able to launch GPO and GPX on base blockchain as a 100% fair launch. GPO is for big buyers, GPX is for small buyers initially. And all of these things work harmoniously in order to create a very advanced form of money. And we reward the GPO Polygon holders for coming early by allocating 5% of our 10% fee anytime GPO base is bought and sold, which provides a very strong profit to our GPO Polygon holders for coming in early. And of course, this is the way that we've designed our entire ecosystem because of all that we've learned about blockchain and all the different problems that have happened, and how to go about actually launching a form of value or a store of value without anybody to underwrite the liquidity. And how do you create true value or dollars coming into the ecosystem? And GoldPesa has done that by licensing the pawn code externally, and using the profits from licensing the code, we end up transferring into the pawn smart contract every single month or even week if we can. And this provides dollars into the ecosystem. And so the very first thing that we want to do is we want to simulate and say, okay, we're going to transfer $10 billion into the Pawn AI smart, we're calling it a smart contract, but it's really an external wallet. We're just doing that just so that we have enough dollars for the simulation. And then from this 10 billion, we will slowly add dollars into our ecosystem to give us a good idea of what realistically would happen in real life. So let's go ahead and do that. And you can see here that from USDC, we have transferred now to the Pawn AI contract $10 billion. And so if we go into the USDC and we go to the balance of function, we will see that $10 billion is now the balance of the Pawn AI. The next thing we want to do is transfer some dollars into the market, which will transfer $1 billion. So when we're doing is we're trying to get all the dollars ready. So we put dollars in here. We now need to put dollars inside of this GPX market. We'll put dollars inside of the GPO market, so that there's some starting amount of money that we can simulate this with. So here's the GPX market. Here's the GPO market. So we can see and put some more breakpoints here. So we can monitor this step by step. We can see that we have transferred now this is 1 billion, I think. $1 billion into the GPX market. So the GPX market is a simulation of all of you guys, all of you holders, which are currently holding dollars as a collective. And then GPO market, which is 1 billion. And we can see here in the balance of the USDC that the GPX market has $1 billion and the GPO market has $1 billion, which is what we've done here. The last thing we want to do is transfer some $10 billion into the mine, the GoldPesa mine. And we're just doing this to make it easier to buy the $10 miner using this USD. We're not actually buying $10 billion, if you get what I mean. We're just depositing it there, and then inside of our simulation, we will draw on that 10 billion and start buying $10 worth of GoldPesa miners. So we'll go ahead and do that. Okay, we'll just uncheck some of these because we've already checked them and it's all working good. So we're just setting up all of our smart contracts with what it would look like. Okay, so transfer 10 billion into the mines. We can see that from the USDC initial supply, we've transferred 10 billion into the mines. We come here and we can see 10 billion, 1, 2, 3, 1, 2, 3, 1, 2, 3, 10 billion in the mines. So all of our dollars are now in the right place. So the first thing we want to do is to swap an initial amount of USDC for GPX on behalf of the market, because on minute 1, the first transaction is going to be a buy order because there's no GPX in the world that can sell into the pool. So here we are just finding a random number between $1 and $10,000. We're then going to use the pool manager swap function, and we're going to swap from the market. And false, as you'll see many times in this section, it basically means token 0 to token 1. So we're basically saying that this is false. So therefore we're transferring token 1 to token 0, and token 1 is always USDC in Uniswap V4 for our pools. So this basically means we are swapping dollars for GPX, and we're going to swap this swap amount. So let's just do that. So you can see here swap amount 2567. We've chosen a random number between 1 and 10,000, and it chose 2567. We are going to then swap. All right. So we can see what happened here is where are we here? Okay. So from the market to the pool manager, we transferred $2,567. Then from the pool manager to the pawn, we are collecting our 0.25% fee in dollars. Then from the pool manager to the fund wallet, we're collecting 0.25% fee in dollars, and we get a distribution of $6 to the pawn and $6 to the wallet. So go step by step here. We can see that the market bought from this pool, and 0.25% fee in dollars went to here, and 0.25% fee in dollars went into here. So if you want to do this, we can just make this USDC, just so it's precise. So what we do is we as a company, we take half of our fee in dollars and the other half we're taking it in GPX, which you'll see in a minute here. So so far you've seen these two things. So we're going step by step here so that we know our simulations are correct. So we've taken 0.25% there and 0.25% there. So now if we go to the USDC balance of, we should see the balance of the pawn is $6.42, 41.99 cents. And you can see that in the USDC, there's 6.42 in the fund wallet that has been delivered. Then now we have taken the fee. Now the pool manager is going to go to the pool and swap the difference, 2,555. So if we take 2,567 minus 1,280 roughly, we're going to get about 2,555. We can check this, but it's pretty sure that's correct. And then the pool is going to return back to the pool manager 2491 GPX based on the swap, right? And then it's going to pool manager is then going to distribute 0.25% to the mine and the other 0.25% in GPX to the fund wallet. So if we go back here, we can see that after the swap, so this thing happened, let's go in here. This thing happened before the swap, right? And this 0.25, because we are swapping USDC for GPX. So USDC is going into the pool manager. We are then taking the fee in USDC for whichever and even in here, this also happens 0.25% USDC. And this is also happening before the swap, right? So you can see that that's what the Uniswap V4 hooks do. It allows us to take that fee. So that is there. And then this 0.25% fee is in GPX, right, which we saw. And this is after swap in this case, right? Again, if you're swapping the other way, it's going to be the opposite way. So if you're swapping GPX for USDC, it's going to take the 0.25%, put it in the mine, 0.25% put it in here, and then swap it for USDC, and then do the fees in USDC. So this is how we've coded it in the back end. So we want to get an exact of that. So you can see from the pool manager, we took 6.25 GPX and 6.25 GPX and put it in there. So let's go and check that that is actually what's happened. So GPX, we go to the balance and we can see that 6.2591 is in the fund wallet now, and 6.2591 is inside the GoldPesa mine. So that's hard coded, and that's how the mine gets richer and richer. And those of you who are inside the mine are going to keep getting a piece of that 666. One day it could be hundreds of thousands, right? That's the whole thing, which is so crazy about this. And hard coded, immutable, I can never change it. Again, I can't repeat that enough, because every token is governed out there, and censorship. Every single token. Very few real projects, they're too scared to put this in. And you know, of course, we are so meticulous on this, but we figured, you know, balls up, code everything correctly. There's no Microsoft updates here. This is it, one shot. But at least this way, there's less chance of getting hacked. There's all of our holders can buy millions of dollars of GoldPesa and never have to worry that, you know, one day somebody will just remove all the liquidity and then you're just stuck with this token. So, you know, we choose censorship free 100%, more important than everything else. Because otherwise, you know, we're in a trustless world. Nobody trusts. We don't trust, nobody trusts. So let's just stick with that. Okay, so we've taken this fee, all right? Now we just have a summary of the amount that we've taken. And then the pool manager sends back to the market the remaining GPX, because it's a swap, right? All we did really was we took 2567 and we swapped it. And when we swap it, we take all the fees, and then of course the market that initiated the swap should receive back GPX. So at the end of this, we should look at GPX and we should check the balance, and the market should have 24789481. So you can see that here, right? All right. So that looks good. Now what we're going to do is we're going to purchase GPO from the market. So the GPO market is going to go and buy $10 million because GPO is for big buyers. So I assume that there will be a very big buyer or collective group of buyers that will jump for If you try and buy $10 million worth of GPX on day one, you will send the price flying. And you might say price impact is too high and you may not want to get that. And so we did this on purpose because it's important that we get no concentration risk. If we allow the $10 million worth of buyers to buy GPX, then when it reaches $10, they will dump it on everyone and everyone will go broke and you'll call it a rug pull and blah, blah, blah. And then, you know, you'll think it's us, or you'll think I called a friend or an uncle or someone, and this is just ridiculous. And so it's our fiduciary responsibility to make sure that we set up things as intelligently as possible, and then of course we leave it to the world. But this is how we've done that. And so in this case, we are assuming $10 million worth of big whale buy orders are going to buy GPO. And so we will go ahead and do that. And so we've got 10 million and we do that swap. So swap, okay. So let's trace the swap. So $10 million was initially the market went to the pool manager and put in 10 million. So that's 1, 2, 3, 6 zeros. So that's 10 million. The pool manager then provided $1 million, which is 10% fee, to the fund wallet, which belongs to GoldPesa. Of this $1 million, of course, $500,000, we will remove that and place it into GPO Polygon's liquidity pool. This way, GPO Polygon holders can buy and sell freely. And then the other $500,000 would be our profit. So there's no promise. That is purely our profit, so we can then help marketing and everything else to grow the business. And then this pool manager, this is a summary of the fee that was collected. So if we go here, just want to see where we're at. What we're saying here is that the GPO market bought GPO from the liquidity pool, and during that swap, this 10% fee was transferred into the GPO fund wallet. And that's basically what you've seen here inside of here. All right. So, okay, and then what we're going to do is we're going to transfer from the market that just bought. So we can see here, we're taking $900,000, swapping $900,000 from, we went from the pool manager to the pool with 900K, and then the pool to the pool manager with 8.25 million GPO, and then the pool manager is delivering that to the market, which is everybody we're representing as a single market, 8.25 million GPO. So that sets up all of our initial parameters. So the last thing we want to do is we want to stake. So as I mentioned, GPO holders who hold GPO in the market, they can either come and sell it if they want. It's fair launched. Feel free to sell it minus the 10% fee. But if you want to buy it and stake it in the GoldPesa vault, then the market will effectively be able to convert its GPO into GPX in a small way, which could be a very fast way if there's a lot of volume, but they get to convert the GPO to GPX. And why that's important, because GPO might be trading at, $5, $10, $20, $30. GPX might be trading at $200. So a big buyer will say, hey, I don't mind paying $20 and buying the option, and I could later convert it to GPX slowly at $200 and sell it at that point, making 10 times my money. So I'm willing to take the haircut now and take the long game, because I believe in GoldPesa and I'm in it for a while. So why go and buy GPX at $200 when I can buy GPO at $20, $30, $40, $50 at a discount and slowly convert it over? And that's why somebody will eventually come to the conclusion when they see this, and that's how we've designed it. Of course, you know, we don't know what the market will do, and maybe it'll surprise us, but either way, it's a pretty good value proposition. Okay, so we are now getting through that. So 8.25 million is now of GPO. So let's just double check that so everyone can be sure that that's the case. So we go to the balance of GPO, and we can see that the market now owns 8.25 million GPOs, right? And so these are just setting up the things. So now before we start our simulations here, we now want to go from transfer GPO from the market to the vault, the entire balance of GPO. So we're going to transfer the 8.25 million. So that's done. And when we transferred, what we did, we went from the market to the vault and transferred all 8.25. So that's equivalent to staking inside of the vault. And so we will see here now that the GPO market has no GPOs and the vault has all of it. So now the goal here is for GoldPesa, the pawn is going to come and convert these 8.25 million GPOs into GPX slowly, as you'll see with our model, which we're going to step through here. Okay, so far everything has worked exactly as we've planned and exactly like it would to set up all of this. So what we're doing in the simulation here is we are taking hours in year, which is actually 10 years. So 365 days times 24 hours times 10 years. That is the number of hours we are going to simulate this through, so we can get a good idea what happens over 10 years. And what we're doing is we're going through every hour from the first hour to all the hours in 10 years, which is 87,600 hours. And we're doing it hourly. This could be, it could happen a lot quicker, it could happen a lot slower. We're just trying to get a good feel for it, right? Ultimately, when you're building something to go viral, you know, it's very difficult to gauge, because there's no real data to market on. A lot of the trading you see right now is wash trading. You know, you see a meme coin with $2-3 million worth of daily volume, but it's fake. It's fake volume. You feel it's real, so you feel, oh, I could buy $100,000 of this. But if you try and hit this sell order, you will see that it's a facade. And so, you know, real volume is very hard to understand of what's real and what's not real in this market. And it usually comes down to market makers, and we code market making software in-house. So we know exactly what's happening on that front. And with GoldPesa, it's fully decentralized. We're launching only on Uniswap, so it's unfragmented liquidity. And we're doing it in a way where, you know, there is no wash trading. We are not generating volume on a GPO and GPX base at all. If there's a swap there, that means there's a real human swapping, or at least a real bot, but still real money moving in and out the ecosystem from external, and not just giving everyone the facade that this thing is a lot of volume, right? And of course we can't do that because there's a lot of fees. So if we start generating volume, these 1% fees will end up draining everything. So it wouldn't be a good idea to do that, and it doesn't come to us, so we would end up just hurting ourselves if we were to do that, so, or if anyone were to do that for that matter. So okay, so what we're doing here is we're now taking a decision, and what we're doing is we're finding a random number between 1 and 100. And the reason we're doing that is because we want to then compare that random number to the mode. So if it's a number greater than 50, as you remember up here, we have 50 set as the mode. And so what we're saying is that if there's a random number between 1 and 100 and it is greater than 50, effectively 50% of the time is a positive hour and 50% of the time is a negative hour. And we'll adjust that later when we've gone through this to make sure that those simulations are correct. Okay, so let's step through this. So find a decision. So in this case, The decision was a random number was 61, in which case it's greater than 50. And so we're going to assume that the first trade after the initial trade is a positive one. So we're going to go in here, and that should click there. So what we're doing is we're saying that the maximum GPX that is going to be bought is going to be the balance of GPX inside the pool. So if we look at GPX balance of, and we find a GPX, we can see that 97,500 GPXs are in the pool. So what we're doing is we're finding that divided by 100 to determine that we're saying that at any given time in any given hour, someone's going to buy max 1% of the total GPX that's inside the pool. So you can see here that the max GPX is 975, which is 1% of the 97,500. And then we're going to find the max USDC, which is simply the 975 times the price, and that gives us the max USDC. So we can see that $1,025 is going to be the simulated net buy order for this hour. And then we're going to find a value between 1 and the max amount. And by chance, we chose $234 as the buy order. And then we're going to go and swap. The market is going to swap with the pool. And as you saw here, false, that means it's USDC for GPX, and the amount is 234. And when we do that, we should get there next. So let's just uncheck these. Okay, and if we follow that swap, we can see the swap starts here. So the market went to the pool manager, delivered $234. The pool manager paid the pawn 0.58 cents in dollars as our 0.25% fee. The pool manager paid the fund wallet 58 cents, which is in USDC, and this is a summary of that. Then the pool manager sent the balance of $233, which is $234 minus the fee, to the pool. The pool responded back to the pool manager with the total GPX of 221. The pool manager then pays the GoldPesa mine 0.25% in GPX, as we did before. The pool manager then pays the fund wallet in 0.55 in GPX, which is the amount of fees into the fund wallet. And then if we go into here, we just want to do a quick check to make sure that we can see that the fund wallet now has a 6.81 because it had a 6.3 before, roughly, I think. Let's just double check. I had here, yeah, 6.25. It first delivered on the first swap, and then 6.25 plus 0.55 gives us 6.816 roughly. So that looks right. And then the pool manager then gives you a summary of the fees exactly as we did. And then the pool manager delivers to the market the total GPX. So they've done the swap and delivered the fees to the right locations and the right contracts. Then what we're doing is we're assuming that the mine starts with 10 people inside the GoldPesa mine. And in fact, this should be only 10% of them tell 1% every month. So what we're assuming is that if the total miners are 0, so we're doing this once every month because we assume that, people go to a dinner party, they go out with their friends, they might tell a friend. It doesn't happen as quickly as we would think. Sometimes it could happen every day. Depends on how viral something goes. But otherwise, it will happen very conservatively every month. You're going to go and tell one person. And so if 10 people enter the pool or GoldPesa mine on the first month, we assume thereafter that 10% of those people are going to go and buy miners. So in this case, one miner is at the end of the month is going to come and enter the GoldPesa mine. And we're going to keep a 10% of our total miners as a growth rate inside of the mine. And when it buys the miner, it goes and takes $10 as we saw in the mining contract. Right here. It buys the miner, it basically puts 1 in here because 10% of 10 is 1. And it goes and swaps that $10 for GPX, which creates a buy order, and then stores the GPX inside the mine, making the mine richer and richer. And of course, you can leave the mine at any time. That's one of the benefits of the GoldPesa mine. But while you're in there, you get a piece of that 0.25% that is constantly going inside of the mine. So because this is the first, we should reach there, there, and there. So we'll just put some breakpoints. So we can see that because this is the first hour, we're assuming that 10 people are going to enter in the first hour, right? Just want to remove the breakpoints so that we can keep going with the simulation. All right. So now I'm going to go through this. Okay, now it's going to buy 10 miners, which is $100. So if we click buy, we're going to get there. And we will see that the mines went and bought. Let's see here. So the mine, we can get into this in a minute, but this is what we call a rebalance. And what it's doing is it's removing all of the GPX and USDC and then placing liquidity at a different range inside of the pool. And we're doing that because as we've seen demand, because we've seen buy orders come in, our liquidity code knows now that it's time to release a little bit more supply. And so it does that only if it sees that we have demand for our product. Otherwise, it just leaves it for the market. There's no point in dumping supply in. In Bitcoin's case, it puts supply in every 10 minutes. Whether the market wants it or not, it doesn't care. It's going into the market, right? And of course, if the price is $100,000 or $1 million, that becomes a lot of tokens entering the market, which is why there's a halving. So the model is quite genius in its way, because time is also something that is really important for human psychology, but that is a whole other discussion. But for us, we don't want to wait 15 years for our price to go and for us to build a really healthy and a product as a store of value. We want to do it in a fraction of that time, so we've created a demand-based release of supply. So that we can get into a little bit detail later. But for now, the mine went to the pool manager, delivered $100. Pool manager delivered the fee at 0.25%, as we discussed before, into the fund wallet and to the Pawn smart contract, which then summarizes it there. The pool manager then swaps the balance, which is 99.5, and then delivers the GPX inside of the pool manager, and then the pool manager delivers the fee and GPX to the mine as well as to the fund wallet. Gives a summary of that, and ultimately delivers the balance of 93.62, which is this mine, to the mine, and that gets custodian in the mine, making the mine richer. So of course, if those 10 people wanted to leave immediately from the mine, they could take their 93.62 GPX and be on their way, and they can sell it at any time, because that's what a fair launch does. So they would get a fair sale price for that. So that was okay, and that's good. That will happen every month. This is what this means here. And we're also saying that only do this if it's less than 10 million miners. So we're capping it because, I mean, we should see 100 million miners, to be honest. But like any S-curve, if you have any infinite system, you're going to start seeing things slow down. So the mine really creates a very strong, healthy injection of staking, which creates a healthy liquidity as we are growing and reaching critical mass. Later, we'll of course see people leaving and taking profit, but of course you can sell your miner and leave your miner inside because it's an income generating asset. So if you got in early in the mine, wow, your miner could be worth millions of dollars for $10. Again, if we reach that kind of, if this, then this, right? So that's that. And we will assume that growth rate, that all works perfectly. Now we will assume that every month the Pawn AI algorithm transfers. We said 1,000 here in the comments, but actually what I've done here is I've assumed that the amount that the Pawn AI will transfer to the Pawn is proportional to the hours. So if we're in hour 1, it will transfer, $1 basically. And we're doing this because over time the Pawn AI will generate more and more profit, and so we are simulating it that at the end of as we get to year 7, 8, 9, then so what we got here now is, so that's a pretty big assumption, because when we get to 87,600 hours, which is in 10 years, will we be buying back, or will we be transferring $87,600 per month? Probably. I mean, we would expect us to transfer a lot more than that, in the millions of dollars per month, because the Pawn AI is extremely scalable. And as we grow market share we could see $1 million a month going into the mine. So I don't think it's unreasonable to assume this. It's actually very, very small. And we'll play around with this in the next video to simulate this. For now, we're going step by step so that everything is checked. And I'm checking it for myself, really, but I'm doing it live for you guys so you can see as well. But this is what I would be doing if the camera was off. So, okay, that's good. So what did we do here? We're then going to go in, and we are going to, as you can see, it's hour 1. So we're going to transfer $1 into the pawn smart contract. So if we can go into USDC here, we can see the balance of, and we can see that the pawn has 7.25 in it. So when we're done this, it should have 8.25. 8.25. There you go. $1 added to the pawn from external tap of money, which comes from the intelligence of licensing the pawn AI code out, and we'll get into that later. So now we want to go through and look into the pawn hourly routine, which happens inside of the pawn smart contract. So this one we've got to be really slow and careful. This is very, very important. So what's going to happen is we are going to go into this function here, and that will take us into here. So let's go ahead and do that. So the first thing that the pawn does inside of its hourly routine is to swap the USDC for GPX. So this is the first thing here. So let's go step by step. So the first thing here, let's go even very, very, very slowly here because this is super important. All right, so let's go in here. So it's going to first do and take all the USDC. Okay, so the USDC balance we can see here is 8.25, which we saw that was inside of the pawn smart contract from the last transaction. So we're taking the total balance. We're then finding a random number between 0 and the total balance divided by 100. So we're basically finding a value between 0 and 80 cents. So if we go there, now our random value is 7 cents. So what the pawn is going to do is the pawn is trying to find a random amount that it's going to buy for this hour. So then the next thing it's going to do is we're going to get the current balance inside of the GPX liquidity pool. So when we do that, we can see that in the pool there's 98,000 GPXs, and there is $2,888. And what we're trying to do is we're trying to figure out that if we were to make this buy order, what is the price impact that we would have on the ecosystem? We don't want the price impact from the pawn's buybacks to be greater than 0.5%. The reason for that is that we have a 1% fee on swap, so it avoids any front running or any sandwich attacks where somebody will want to buy and then offload it after the pawn buys every hour. So you've got, so far we've calculated 7 cents. Then we want the theoretical USD balance, which is going to be the current USD balance, plus we're going to simulate what happens if we buy 7 cents more. Then, so that 7 cents is there, and this is 2888, so 288,377, 288,377, that's fine. Then we've got the current GPX price, so let's just grab that. So we're going to the pool manager, we're calling the get price function. We can see the current prices right now is $1.05. Now this current price is the actual price. Okay, so the current GPX price is $1.05. So what we want to do is we want to make sure that this get price function in the pool manager, it's returning the 1.001 to the power of the current tick, which gives us the current price and not the square root of the price, which is good. So let's just go back here. So this is the current price. So now we want to find the square root of the price, which is using math.square root of 1.5. So we do that. That gives us 1.02. Now we're going to use the pool manager and get liquidity. So if we go here and pool manager, Get liquidity returns the liquidity for this pool at this time. So what we should expect to see here is we should probably see a little over 100,000. We did one rebalance, so 100,938. Yeah, that looks okay. Now we'll see the lower tick, this lower tick in the GPX pool. Lower tick you can see is 4. We started at 0, but we rebalanced and moved the floor a little bit higher. That's how we sort of trickle new supply into the market without in a systematic way. Now we're looking for the square root of the price at the lower tick, which is what we consider PA. And now I refer to this here. We're calculating this here, PA, right? So that will give us a good idea. Put this here actually, so we can get a good idea here. Okay, so we're calculating PA. Then we want to get the price after the swap. So we're using our theoretical USDC balance. Then that's this here, theoretical USDC balance, which is Y. We're dividing by liquidity, which is Y divided by LX. And then if you add to the other side, PA, then you get your square root of price, which we're going to call square root price X96B. It's not really 96, but we'll leave that semantics later. Just want to keep the names the same. Then we're going to get the GPX price after the swap, because we need to, this is a square root of the price, so we need to then square it and then calculate the price impact as a percentage. So we're going to get the GPX price after the swap, which is not squared, minus the current price, which is not squared, divided by the current price, which gives us the price impact that we've created by as our matter of this buy order. So let's do that. We can see that the price impact is very, very low. 1.86 to 10 to the power of minus 5, which is really good because the price impact threshold is 0.005, which is 0.5%, right? So we don't want our price impact to be greater than that. So we're just calculating the max GPX price after swap, given that we were in a max price impact, just in case we need to use it later. And because the price impact in this case is not greater than the price impact threshold, we should reach this here. And I don't think that we'll just uncheck all of these because I'm done checking them. So because this is false, this is where we should reach. So we press buy, that's where we went. Okay, then we got this. So 1.03 is the square root of the price. Max price impact would be 1.06. That's the most that we can go, which is 0.5% from today's price. And then we're calculating the square root of that. So effectively what we're saying is that we can go ahead with the 7-cent buy order because we're not going to affect the price by more than 0.5%. Right? And that's why it's going to the pool manager and it's swapping, and we're using the V4. This is all Uniswap V4 math, very simple. As I say, blockchain is the most complex grade 2 math problem in the world. Literally, you could be in grade 2 and do all the math, but it just ends up becoming this maze of things that you have to think about. So now we're going to execute a swap, right? And this is false. So we're going to go USDC to GPX because that's what we're doing here. If you remember, we're going swapping USDC for GPX. We're going to go ahead and we're going to do that. Let's just uncheck all these because we checked them. Actually, we'll put that one thing there just in case it reaches there. And we swap. Okay, now we're on the next one. But during that swap, we want to see here that the pool manager, so what the pawn did, the pawn went to the pool manager, delivered 7 cents. Pool manager paid the fees, as we talk about, 0.25%, which is this. Then the pool manager went to the pool and swapped the 7 cents, which is minus the fees, into GPX and collected the GPX. So now at this point, GPX of 0.066 is sitting inside of the pawn smart contract. The pool manager then pays the mines and the fund wallet in GPX 0.25%, the same exact thing that happens on every swap. And the pool manager then gives a summary of what it paid, which is what we call an event. And then pool manager delivers to the pawn this 0.659 GPX. So now we're going into the next step of what this does. Now we've got GPX inside of this smart contract. Now what we're going to do is we're going to go and swap the GPX for GPO. That's the second part of our routine, pawns routine. So that is here, swap GPX for GPO. And this is how GPO holders can stake their GPO and get converted into GPX. This is where the key thing that happens. So if you see that on the chart, what's happening is that the pawn is basically taking the dollars. So this is here is, let me zoom in here. This is the step one, right? It's taken dollars. This is step two. And it's returned back the GPX. Now what we're doing is we are step three. Right. And then we got step four. So now what we're doing is the pawn has done step one, bought with dollars, a random amount based on the balance it has. Then it took step two and received GPX. Now it's sending the GPX to the vault and it expects GPO back on a one-to-one basis. So let's see that simulation here. So GPX for GPO, so we should enter in here. Okay. So now if we look at the GPO inside of the ecosystem, we're getting the balance of this address, which is 0.659, which we saw here. So the total balance 65917 is the total GPX that was purchased. Then what we're doing is we're checking to see that there's enough GPO inside of the vault that has been staked. If it's not, then the GPX will just remain inside of the pawn. But because we staked 8.25 million in the very beginning to set up this entire simulation, it's got more than enough. So we're assuming that many big buyers have come and they've staked, right? Let's put some breakpoints here. So that's good. We've checked the balance. So now if swap amount, okay, is, okay, so GPX eco in this case is less than the amount in the vault. We know that for sure. So this is going to be true, and we're going to end up in this one here, not in this one. So we're there. Now we're basically saying we're going to swap the entire amount of GPX that we just bought, 0.06591717, that's correct. And we're going to uncheck that, and we come here. And swap amount, of course, is greater than, not equal to 0. In fact, this should maybe be greater than 0, because that would make sense, but we can change that later. So now we're going to call the vault, and we're going to call the convert GPO function, where the spender is the pawn and the GPX amount is the spender is the pawn, which is the self address here, and the swap amount is 0.0659 GPX. And what we should get is the next step here. So what we can see here is 0.0659, right? So we see here that the pawn delivered to the vault 0.0659717 GPX, and it got back the exact amount of GPO, which effectively exchanged, right? Now GPO is sitting inside of the pawn smart contract. So that takes us to the last step. What are we going to do with the GPO that's there? We want to take that GPO, and we are going to then swap GPO for USDC, right? So let's go and do that, because now we're going to swap it and get back dollars. And this is how the flow you'll see that's happening. So the last step is to go in here, and we're going to first check what the GPO balance is of this address, just to be sure, because we know it's 0.0659717, but let's just grab that figure. So you can see that GPO is 0.6599717, which is greater than 0. So we're going to go in here. Since this is true, this is going to be executed. And what it will do is we'll go back out here and we'll make sure we'll put a breakpoint here because it's going to kick us out now. It's going to go here and it's going to swap. Right? So the last logs that did is we went and we swapped the vault, went from the vault to the pawn. Sorry, what did we do here? So the pawn went and gave that, and then the vault returned back 659. Okay. Now the pawn went to the pool manager with 0.0659 GPO. The pool manager then sent to the GPO USDC pool the entire GPO. The GPO sent back USDC, which is the amount to swap. The pool manager then paid the fund wallet 10% of that, which is correct, in dollars. So now there's $10, 0.0078 USDC. Distributed it to the fund wallet, which is an event which just shows us what just happened there. And then the pool manager transferred to the pawn the dollars. And then the dollars stay inside until the next hour. So what's happening effectively is, you can see what the pawn is doing is it's step one, taking all the dollars, finding a random amount, buying GPX. GPX comes back. Step two. Step three, it takes the GPX to the vault, swaps it for GPO on a one-to-one basis. Then takes the GPO, and this is step 5. Right? Boom. And this is step 6. Right? And then USDC comes back into the pawn and it's done. So the USDC is gathering inside of here from this. So effectively what's happened is a big buyer, if you think about it, has come into the market, bought GPO and put dollars in here and GPO here, then staked the GPO here. And through this mechanism, the dollars are going from the whales into here. And then if you just follow the dollars, if you think this thing here is actually USDC buy, right? So let's follow the dollars. The dollars go from this market to here. Then a 10% fee is taken in dollars and given up to the fund wallet. The USDC goes into here. Then the USDC goes into here and ultimately ends up inside of the pool. So this is how the USDC goes. And the USDC from the pawn algorithm simply adds on top of that, creating more and more real dollars. Without this, if you take that out, this whole thing is a gigantic Ponzi scheme. Just made looks really nice. But like anything else, it's like a Ponzi scheme. It's like Bitcoin, like anything else. No, I don't want to say Bitcoin is a Ponzi scheme, but I'm just saying it's like a commodity, let's say. It's a commodity. But with this, if you're adding dollars inside of here, then that is real dollars coming from external type of money. And if you see, there's no money going into the pawn from anywhere. This is a closed ecosystem where simply GoldPesa has licensed its code in order to generate a profit for GoldPesa holders. And that's how we've arranged it from a business standpoint. And the fee, the money coming in here is a licensing fee. And we've done this in order to ensure that GoldPesa is not a security, right? We are putting this money into the pawn smart contract, not because we have to, not because we've promised it. It's because we just think it's fun. That's the reality of it. It's just fucking fun. And just to see what happens right now, you can see how much fun I'm having. Then you will realize why we do these things. And of course, it injects volatility, right? Great. Volatility is good. More money, more chances for you guys to make money. So if we come back out here, come back to our simulation. So far, we've gone step by step. We've seen every single thing. We want to take these off here. We can see here. And we just finished the simulations. Just get rid of all the breakpoints, right? So now what we do, if we just stop this here, we'll remove all the breakpoints. Okay, we've done a full walkthrough of the entire code. Everything is looking good. All the money is going where it should, and everything is working perfectly. What we haven't done, and we'll probably leave from the simulation standpoint, is we did not simulate GPO buying and selling. And the reason is it's a full fair launch. GPO buyers, whales will come in, they'll buy, they'll take a position, they sell. It doesn't really affect too much the entire ecosystem, other than the fact that GPO holders will make a lot of money doing it. But ultimately, we want to simulate what happens to GoldPesa, because this mechanism, we've already assumed that $10 million of GPO buyers have bought in the first part of the simulation. So we will leave that out as it's not necessary, and it doesn't change the fundamental flow for GPX. So we'll just run one quick full run with this, and you can see, we'll just zoom out here again. You can see what this results in, and then in the next video we will run many different simulations, and we'll change the parameters to see how this whole thing goes. Okay, so all that's happening is every hour for 10 years. Moving all the money around, assuming 50% are buying, 50% are selling. We're never buying and selling more than 1% of the balance that's out there. The mine is growing at 10% per month. The pawn is delivering proportionately more and more money. And then you get a simulation. So here we can see that over 10 years, we could expect an 800 million, it's a 10 to the power of 8, $800 million market cap based on these very conservative numbers. We can see that the amount of supply reduces out there in the market naturally. We can see there's initially the market holds dollars and are giving money away, and then this is very important because now as a market there's real dollars coming back to the market in profit, not just in unrealized gains. These are dollars sitting inside of the market. We can see what's happening with the pawn. The pawn is effectively getting topped up every hour, and then it's using that money to slowly buy, which is fantastic. So this is exactly what we want to see. This is a good number for what we're doing, and I think that is interesting. So keep a constant drip of buying into the market. We can see that the mine is getting richer and richer over time. There's 25,000 tokens inside, which is a lot, because you'll see the value at that kind of market cap is very big. 20,000 GPX tokens are inside the fund wallet, which is our profit. You will see $3 million inside of the fund wallet, which is our profit. Then you can see the amount of GPX inside of the pool. Right. So you can see that it slowly started in 100,000 and slowly getting less and less because the market is taking that GPX out. Then you can see there's about $14 million roughly inside of the pool with this simulation. See that here, $14 million dollars. Right. Then you can see that the lower tick, right, is increasing. This is us drip feeding more and more GPX into the market as time goes. Have a big look at that. Right. That means it's a demand-based release of supply. The top tick stays at tick max, so we never change the top range of Uniswap V4. We can see that the GLP, which is a GPX hooks contract, is inversely proportional to the tick, lower tick, because every time you increase the lower tick, you're adding more new supply into the market. So very little supply has entered the market. At first, we were thinking this is not good, but it is, because it limits the supply, and only if we're able to sustain the new supply, it will deliver more tokens into the market, right? And if not, it won't do that. So I think that that's really okay. In fact, I think that's important, and that's okay. Just thinking. Yeah, that should be okay. Because if ultimately more tokens are out there, maybe you have to think about this one a little bit. Should have more tokens delivered out there, but you can see the price of GPX in this case started at $1, and in 10 years you start seeing some volatility, but reaches $6,000–7,000 per token, which is important, you know, because even when you enter at $1,000 per GPX, you want to know that it has a possibility of going to 2,000 or 3,000. So if you get to I know it seems a lot from $1 to 1,000, then that's good, and a lot of people won't hold out 10 years, you know, for that. But if they do, then you know they benefit from that. And even if they were to sell off, the liquidity is so thick at this point that it's a realized real game and it's unfragmented. So you can go to Uniswap, hit the sell button, your $1,000 per token is there. But when you buy at 1,000, for this to work, you need people to know that if you buy at 1,000, you get to 6,000. And here, if you get to 6,000, you know you'll get to 20,000 or 100,000. Obviously, until you reach a certain S curve, right, in the market. But this creates a very healthy form of money, and all of this is happening in this way because real dollars are coming from outside, and we will do our best to make sure that the pawn makes money, and we just simply deliver it to the pawn smart contract to deliver that value. We assumed, you know, 10 million miners, right? I think we had put there as 1 million miners was the top end. Was it the top? That was 10 million miners. Let's just, oh, this is the smart contracts. What did we say here? 10 million. Mine's is 10 million. Okay, so there's still more miners coming in, which is good. There's only 1 million miners here, so that's good. Then GPO in the fund wallet. Obviously, there's nothing in there because we don't put that in there. Then you can see the USDC inside. So we made about $1 million because we've done no more GPO transactions. The vault ended up getting about 70,000 GPX converted, which is pretty good. And then, of course, out of the 8.2 million, the GPOs that were converted inside. And that's basically that, right? So that takes us what we'll do in the next video is, now that we've gone step by step, we've checked everything, you see where the money's flown, you see it's exactly like we've programmed it. What we'll do is we'll start adjusting some of these assumptions, like maybe this is 40, right? Maybe it's 30, maybe it's 80, maybe it's, you know, we'll start adjusting that. We'll start adjusting some of these numbers so that we can see what would happen if this were to happen and what would happen if this were to happen. I mean, already at this very basic simulation, you're looking at $6,000 at the end of 10 years as a token price, which is starting at $1. And you'll be able to sell with great comfort because the run on the bank mechanics are strong. Unfragmented liquidity, good distribution, and all of these things. So this is what happens when you have a very healthy ecosystem. You can compare this to the very first video of this series, and you will see that that first simulation was done as a very basic meme coin. And by putting in these mechanics that are there, all of these things, and by rewarding our holders with the GoldPesa mines, by having the pawn smart contract buyback every hour, all of these things are a very important part to growing this extremely advanced form of money. So launching a token is not as easy as it looks. It requires a lot of thought, a lot of learning, and I hope you guys appreciate the intelligence and simulations that are happening here. Once we're done this, we'll know the final model, and we will try and break it, and we'll finalize the code of the smart contracts. We'll deploy it and execute our stealth launch. So stealth launch basically means that it will be launched as a word of mouth. We will not place our contract addresses publicly anywhere, and it's only going to organically grow, and that's also an important part of our model. so that we can get a good healthy base in our ecosystem and no pump and dumps and so on and so forth. All right, that's all for this. This was a long video, but this gives you a really good idea of everything. All right.